Well, they say in life that behind every successful man there is a woman, but in case of Raamdeo Agrawal and Motilal Oswal, it's a different story. Two students became friends, then investors, entrepreneurs, and now successful businessmen. Welcome to the show. It's a fascinating story. We always talk to you about markets and about investing. Today it's all about how have you achieved what you've achieved in a span of less than 35 years. So, as the legend says,
28 years.
28 years now, 28 years. That's a precise number. So, as the legend says that you actually met in a hostel as students, and that's how the journey began?
Yeah. Raamdeo was much senior than me, maybe about 3.5 to 4 years. But he exited from the hostel and I entered. So that connection still remains, and that's where we started from.
So you actually met before and then you met your respective life partners after that?
Actually, we didn't stay in hostel at the same time. He was junior, but I had seen him. So when I was staying in Lokhandwala and I was coming to Andheri station, I had a motorcycle, Hero Honda, brand new motorcycle. And he was always looking for a ride because the transport was in mess.
Free ride.
Free ride. And that's how we started meeting. And then he was looking for a broker. I was looking for somebody, to go along. To get into the market. I was doing research. So I knew everything about the stock market, but I didn't have money and wherewithal to start. And his brothers were there in Ahmedabad and Chennai. So they were wonderful help to become two best clients to start with. And we two came together and then slowly we started. So, when you look back, nothing was planned, nothing was designed. It was just a scarcity, broking services were scarce. It was very manual and capacity was limited. One person can do only 150 transactions in a day. So one broker can do only 700 transactions. And the whole country was just rising. So it was a seller's market. And when we got in with just about two people, one telephone line and one peon, the venture was successful.
I used to do sometimes, even really I think zero trade, but trades were normally about 10 to 20 trades at that point in time when we began.
So what really clicked? You meet several people, but you just clicked with one or two people in life, and especially at the partnership level. So what really clicked?
So I think because we were coming together, and for at least 6 months, 8 months, we were exchanging notes. So he was also interested in the market. Fundamentally, we both were chartered accountants. So we both were interested in making money in the stock market and making career also in the stock market. But we both didn't know how to go about it. So when I proposed this, that let's come together, you have the clients and I have capability to find somebody who will sponsor as a sub-broker. And that's how it started slow up. If by chance there was a little difference of opinion, or if there was a small setback at the early stage itself, the whole thing would have broken off and nobody would have even remembered the whole story. But today, since it worked out, because for first 5 years it didn't have the critical mass to say that we are successful. Till about 1990, I remember we had earned about 10-12 lakhs.
But that's a lot of money in those times.
No, it was not a lot of money. I can tell you, even chartered accountants at that time was also getting about ₹1 lakh, ₹1.5 lakh. Okay. So between two of us, we could have earned that money otherwise also. So it's not that we did a great job. But in 1990, we took a big plunge. We borrowed 10-12 lakhs and bought membership in BSE. And what happened was, that was the starting of the Harsha Mehta bull run. So for every business to take off, you need one tailwind, one bull run. And that's what we got. And we got mother of all the bull runs. That was Harsha Mehta bull run. And I'll tell you that 10, 12 lakhs, 15 lakhs which we had in 1990, by 1992 or 1993 when the storm passed of Harsha Mehta, we had 30 crores in our pocket. And only out of broking and investing and return. So I had 30 crores portfolio out of absolutely nowhere. And we had a thriving broking business which was making about 2-3 crores on its own. So once 30 crores came, then we said, now nobody can throw us out.
So which is the first stock you remember buying in your firm?
First
stock.
First stock.
I don't always remember your first trade, right?
So I'll tell you.
His kind of prerogative. I never used to bother about what stocks and what price.
You always looked at profits, not what
I look at profits and I looked at business. He looks at the portfolio. Yeah.
So the dividing line was very clear from the beginning. That Raamdeo will look at the investment aspect. You would look at
all other kind of aspects of the business.
But it was not like a sit on the table and decide, okay, you do this, I do this. It was a very natural kind of taking up of the thing, in the sense that I have never bought, sold 100 shares of companies. All the shares trading or buying, selling for the client and for the portfolio is done by him only. So even today, if I get an idea, I tell him, boss, do something about this, because I'm not comfortable transacting. So the transaction part, when it came to him, obviously the order taking and researching and advising was on my domain. That's how it got. So ops went his side, and running the company went his side, and all the research and talking to the people, that came to my this thing. And as the things increased, then the verticals started becoming much more clearer.
Do you think it's a challenge with Raamdeo to convince him to sell something, because he's good at buying but he's very bad at selling?
I used to, I think, even today in the morning I said, Raamdeo, we have this kind of, I think, ETF in our portfolio, why don't we sell it? He said that, no, it's, we should hold it. But I said, it's only 1.5%. Why don't we sell it? Then, yeah, okay, let's execute that kind of stuff. So I gave him some idea, but after that, really, I think.
But you never interfere in the way he invests?
Never. On the investing side, never.
And you never interfere in the way he's running operations?
See, we keep on advising on each other. That's absolutely not an issue. But I think we always build on complementary skills. He would have very strong skills on market, investments, on PR, brand. I would really, I think, take care of technology, marketing, operations, client-centric kind of, I think, approach. So that's the way I think we do it.
There is enough on the table. There is so much, many issues we agree to disagree. But then finally somebody has to take the lead. I mean, if he says that this is only 1.5% of the portfolio, why should we bother about it, even if it is good? So let's sack it. So he's also prevailed, I have also prevailed, kind of, So that's how it goes on.
So is wealth the ultimate driving factor, or is value the motivator?
I think wealth, I would say, at least to me, I would look at, I think, that how really excitingly I think the future is going to be, and how we are becoming, in fact, really much better on the ground level. Raamdeo always look at it, this is the network, this is the thing. I said that really, this is a part of the journey, but really I think it comes out of doing something really which is exciting.
Yeah. So values are never compromisable. Value comes first before wealth. Even in 1987 when we were paupers, we didn't have ₹1,00,000 in our pocket, then also values were absolutely supreme. So we paid full taxes in 87, and in 90s also, when things were not, I mean, our trade was not known for full compliance in tax. And so a lot of problems came to the broking company because of non-compliance with the income tax department. In fact, that time we were individuals, we were not corporates. So we were given Samman Patra for being the highest taxpayers in 93-98. That time it used to be fun to meet all these heroes and heroines in those ceremonies.
But the only difference between that time and now is that you may be paying more tax than all the hero and heroines.
Of course, but it's a corporate structure.
But now corporate structure doesn't get attributed to us. We are much bigger taxpayers, multiple times bigger than that time. But we don't get those certificates. In fact, those certificates should be given to the people. A lot of categories government should create and give certificates, because when you, I get clappings for being highest taxpayers at some point of time, because that shows the character. It's not about the amount. It's about the character of somebody, which is not found so often in India. So I feel always proud that yes, we got accreditation from government.
Let me just put it some number, like say year has just ended, I think, and if you look at, or maybe the year which March 15, our profit was about say 150 crores or so. I think the total taxes paid to the government through income tax or service tax or through stamp duty or through STT must be about 300 crores plus. So we make about 150 crores. The government really, I think we pay 300 crores to the government as well as the taxes, and we feel pride that that's what really I think we are supposed to do.
The firm started as a brokerage, then you moved into wealth management, now you got other areas as well. You're planning to go global, you got investments in the real estate sector, you're also spreading your wings and you're moving into the HFC space. So what's next for the firm now? And we talk about Vision 2020, so let's talk about Vision 2020 for MOFSL.
Yeah, so now one of the very important decisions we took just 2 years back is that now we will confine to whatever the portfolio is. So current portfolio of businesses were broking, investing and HFC. So broking and investing generates a lot of cash. say 200 crores, 300 crores, 400 crores. But it has to find place. Either we give it by way of dividend, which will again come back in investing. We said, let's find a investment vehicle where we can put it. So we found HFC to be a good way to do that. And hence we are building up one of the high quality housing finance companies within MOFSL. So all the money which we earn from broking and investing, that hopefully will go to capitalize that particular company. We have already given 500 crores. We have given 500 crores. 300 given, 200 is committed. So in next 6 months, it will be like 500 crores committed to HFC only. So that's how we'll build and balance if it is left. Because now after some time, even HFC will start giving dividend. So we'll have even bigger pool of cash coming in. We'll put into our own funds. So it is a loop complete, equity for equity, debt for the debt.
Raamdeo, it is often said on Wall Street that to be a successful businessman, you have to be a successful investor, and to be a successful investor, you have to be a successful businessman.
This is what Buffett said. He's a successful investor because he's a successful entrepreneur. Because he can see the difficulties and opportunities of businesses. Businesses don't happen in a straight line. There are good times, there are bad times. Of course, markets don't appreciate that. In good time, markets will be very euphoric, and in bad time, market will be quite depressed. So that helps us in understanding a good company also faces tough times at times. So yes, it definitely, at least to me, for picking in stocks and appreciating the managements, I think it definitely helps.
Is broking more like a business which has stagnated? Yields are coming down, automation, algorithm, ETFs, which means the human intervention, the advice or the value of advice is also coming down. So is that the biggest challenge for you, that a big business, your bread and butter business, the yields are contracting?
I think it's if you look at the kind of, I think the way we used to do broking versus we are doing today, the character has absolutely changed. I think the brokerage yields may have fallen down, but overall volumes have exploded. And there are a huge number of new products that are coming, like options or futures or even on commodities and currencies. So yes, it's a very competitive business. The technology is absolutely the business driver for broking business. But I think broking is going to be very exciting. And if you look at even really, I think the worst, if I look at last 20 years, only 2 years where we lost money. So yes, it's very, very competitive, but I think I would be quite optimistic even about the broking business.
At a time
and still today also really, I think it's giving us substantial amount of revenue and profits even today.
But at a time when everything is now going online, we are talking about robo-advisory where human intervention is not there. And advice, zero brokerage, and advice is free. Everybody wants free advice.
Yeah, no, but see, these are all things really I think which they are bringing because of the size is exploding and it's become a very globally competitive market. So we should take it as an opportunity, that technology, I think the quality of advice, because one thing is very sure that the clients want quality advice, and with so much information being kind of I think provided by the TV channels like you or media, no, it's too much kind of I think explosion of the information. In fact, when we started, there was no information. Now it's excessive information, so completely I think change. And in that sense, I think advice become even more important for the HNIs as segments. Yes, there are a few clients who are self-directed clients who don't want advice, but for them we have provided the best technology platforms.
Before I ask my next question to Raamdeo, I actually know the answer. If I will ask him on a market view, he will say don't look at markets, look at individual companies, and they will always do well irrespective of the environment. But today I want to start with your market view. What is your assessment of the economy, markets in general, where we stand?
I think, see, economy and markets, they are very difficult to predict, isn't it? And what is actually in our control is really, I think, the stock selection, isn't it? And we have seen the bad market gives us huge amount of opportunities for the kind of I think appreciation. So I think the thing really which is in our control is very difficult to really predict. Although you guys all ask the same questions: what is the next level of the target and what is the Sensex level or Nifty level? But it's difficult. So we have decided, boss, at least जो हमारे control में नहीं है, I think leave it, and what is in our control, at least we should do that.
Raamdeo, quality has worked, quality will work, and I think your experience clearly seems to be indicating that quality businesses will always do well. But pricing is also very important. Quality at any price may not work, and that has been the mantra for the last couple of years. And that's where I would argue that some would differ with you, because you like quality stocks, but what about the margin of safety in some of those stocks?
I never said quality at any price. You are only saying that you can buy quality and make money at any price. It is never QGLP, quality, growth, longevity at reasonable price. It has to be reasonable. You don't have to buy very cheap. When there is a quality and growth, quality will make sure, even if you bought a little expensive, quality will make sure you will not sink. But we are not in the market not to sink. We are in the market to make good amount of money. We are all greedy guys. We want to make a lot of money very quickly. So for that you require growth and reasonable price. Now the reasonable price is a function of how much growth happens. So that's where the art form comes. How do you balance this growth and the price? Quality is non-negotiable. I will never buy a junk. And we don't need many stocks. We need only 15-20 stocks. So it has like the F35, multi-cap 35. We launched 2 years back on that's a perfect practice of QGLP. Every minute, every nook and corner of the fund, which has grown, thankfully market has recognized the merits of the fund, and it has grown. It is amongst the fastest growing fund. It has now come in top 25 funds. It's almost 3,400 crore strategy now from zero. So of course a lot of money is our own. But the issue is that we practice QGLP. In last 2 years when market has gone up by 20%, it is up 75%. And 100% invested, no cash call, no timing call. If you give me money today, I'll put it today. So it works. But you got to buy. I agree fully with you that you have to buy growth at reasonable price. But out of 18-20 companies, if 2-3 companies you actually end up buying little expensive, the rest of the pack will support it.
I always enjoy reading your wealth creation study, and in one of the wealth creation study, you had mentioned the importance of recognizing value migration. Yes. The value migration which we saw from private PSU banks to private banks, what we are seeing in pharma industry right now, what we saw in the telecom industry. Yes. So where is the next wave of value migration according to you?
Yeah, so it's say like world's biggest value migration is IT. Okay, it's $1 trillion value migration, Boston to Bangalore. And that process still, quite a bit of journey is done. We do about $108 billion for, I think 15, 16 we did $108 billion. And next year we'll do more like 120, 115, $117 billion. So nobody makes a headline that Indian IT industry on 1st April, you must say that it did another $9 billion of growth, which is $9 billion is big, So that's the biggest thing happening. And within that, there could be a company which can start from $10 million and become $1 billion very quickly. So that's the biggest one. Second is pharma, of course, from global generics to Indian generics, I would say.
But that is getting challenged. US FDA is a real problem.
It's a temporary problem. It's a temporary problem. We must not read into any kind of thing in the sense that if the importance of size and importance of Indian pharma is growing, they also need to gear up to the requiring exacting standards of US. So I would think that this will only mature the like we started broking and we were retail brokers. But in 1993, when Morgan Stanley's and all the global firms came, MSGF came, and that one of the rules they tightened of the bad deliveries or execution, transparency, I think that made Motilal Oswal much stronger. So all these US FDA rules and all, over a period of time, it will only make those companies better.
But stick to the large guys. Stick to the guys who got size, who got reach, who got understanding.
I think in pharma, of course you have to stick to the size and growth and whatever, but still small ambitious companies are coming up who might be $100 million, $200 million, and they have ambition to start one US FDA plant, one injectable plant, and make a lot of money, and from there multiply, say companies like Ajanta and all. So we are still seeing a lot of small companies emerging. Who will become big, that is your call.
I want to talk to you about the HFC space, the housing finance space. You are a late entrant and you're a small entrant right now. You've got big sharks there, you've got banks there which are there. So I want to understand from you that what is it like to be a late entrant in the HFC space, and are the dynamics of the HFC space changing now?
See, there are very few housing companies which have created size. And when you look at the opportunities, I think you look at, what is the kind of, mortgage ratio of the total Indian market is very small. And the business itself is growing at about 20 to 23% in a bad kind of, economic cycle. So I think, yes, we are late, but I think that doesn't mean really, we should not have started. And still, there are hardly 4 or 5 big players there, isn't it? So, and the segment which we have selected is affordable segment. We see that huge kind of, opportunity in that segment, particularly when the government of India is pushing, the housing for all or very kind of, I think, affordable, low-cost housing. So my sense is that this business, I think in the last 2 years, we have done very well. Now the book size will be about 2,000 crores.
Yeah.
About 2,000 crores, 20,000.
Huge opportunity. See, housing for all. What are we talking about? We are talking about 225, 230 million households. And now what is happening is people are living in small places, all the kids are getting educated and they're living their own home and they're building another home in some other city. So there is a multiplicity of homes required in the same family. So housing needs are literally insatiable. I mean, even in US, housing starts are, one of the lead indicators. India, it will take like, for next 100 years, you can keep building houses. So requirement of houses and financing of that, because now nobody can afford to build the entire house on their own. 99% of the houses have to be mortgaged and some support has to be there. So the opportunity size is staggering. That's why even in this, at this point of time, the industry is growing at about 18-20%. Now the issue is, how do you win the game? Do we have right to win? What you're asking is, you are late, do we have right to win? So we have good understanding because of our background of investing in various financial sectors. We have good understanding of what it takes to win. Now whether can we have management team which can deliver on that? We have the risk appetite, we have the capital. We understand what we want it to be done. Can the management team which we have put up, can it deliver? So far they have wonderfully delivered. But delivering on 1,000 to 2,000 crores is one thing, delivering on 20, 30,000 is yet another. So only time will tell whether we can scale up. And we'll do everything to guide the management team to deliver and see 90% rule. See, every business has a 90% rule. Okay, 90% rule of mortgage is the quality of underwriting. If you underwrite well, nobody can touch you because there is a house as a strong collateral of which prices are going up every day. So if you are underwriting well, your spread will definitely come to you. Now, what is your intermediation cost? What is your operating expenses? That is all within you. So fundamentally there is no problem in a business so long as you are able to underwrite well. Like in business of asset management, 90% rule is performance. If you get your performance right, everything else will fall in place. I'm not saying that, I'm not undermining sales, marketing or customer service, but rest all will come. So every business has a 90% rule. And if we get it right and we believe in it and we're able to deliver, I don't see why world will not accommodate us. The way in 87, when we came in as a broker, the world will accommodate us.
Even the AMC business, I mean,
there are 44 AMCs. And
you've become $1 billion already.
We have $1.5 billion.
$1.5 billion.
Just to add about the housing finance, as we said earlier also, that the commitment to the business is huge. If you look at our balance sheet, which may be about 1,400 crores worth of net worth. Now 500 crores worth of money we already committed to this business, which is the single largest investment into any of our subsidiary. So we have commitment, and then its competence. I think we are very confident about the team that all the team brings at least 25 to 30 years experience individually with all these 4 or 5 important guys. I think it's only a question of putting in place the right kind of operational mechanism for us to really build upon that, and we are very confident.
Raamdeo, over the years you've invested in brands. You've understood the importance of moat. Good brands, buy them because they cannot be challenged. But now there is a firm called Patanjali which is rewriting the story. We may call it disruptive, but there is a small player, started late, pretty much like MOFSL, and now is a 10,000 crore company. So is it time to relook the expensive P multiples which we've always ascribed to FMCG companies, especially great companies which have good brands?
I mean, see, it will definitely take away some segment. I mean, they have a segment where they will thrive. Okay, so it is a marketing challenge for the rest of the pack, whether it is Hindustan Lever or Colgate or Imami or whosoever is hurt by whatever product. In that product, they have a new entrant, so they have to find their way. And good entrepreneurs, good companies, initially it will be unsettling for 1 year, 2 years, when they are growing up from 0 to 10,000 crores. They will have some challenge coming in. Later on, I think product superiority, because right now, is it product superiority or is it just the blind faith in Baba Raamdeo's brand equity?
So you will not be in a hurry to say that HUL and the Nestle's and the Daburs of the world will underperform. You still think that these are great companies?
Yeah, they will underperform because sales might have grown, profit might have slowed down. So obviously 1 or 2 years there will be a challenge. But I don't think it's something which will just change, rewrite the rules of successful FMCG company in India.
And one thing you can be reasonably sure of that, Patanjali will never enter the liquor market. That explains why you invested in USL.
No, they have, I have seen, they are being noticed everywhere. They have to find a strategy to counter that. Maybe if they can't fight, then they'll join. In every aspect of it, whether it is atta market, whether it is some cash, some hair oil or some whole lot of SKUs are there. So I've seen a very serious following of that, and the companies are concerned. They need to find some effective strategy to counter that challenge.
All right, gentlemen, really appreciate your time. Good luck. Thank you for joining us.
Thanks. Bye.
That's it on the show. M Square.